Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO's NIO stock, and we're going to be talking about the latest news updates regarding NIO, their recent delivery numbers, their future projections for their approaching earnings report on June 9th, as well as price predictions for this company. We're also going to be going over why Morgan Stanley thinks that NIO stock is actually going to rally in the near term in the next 2 weeks, so this is going to be fantastic if you are a stock trader. However, I personally would rather just buy and hold this company for the long term because it's a phenomenal growth stock according to professionals. We're also going to talk about how NIO stock has actually gained some momentum despite the stock market overall dipping. So we're going to compare it to the overall S&P 500, which is a fantastic stock market benchmark, and we're going to discuss why NIO is actually rallying right now. And then lastly, we're going to determine if NIO stock is actually a good buying opportunity for us to buy and hold for the long term, the short term, or even the medium term. So I'm going to be talking about my plan for NIO stock and how much I have allocated to it. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. I also want to mention that Webull has a fantastic deal going on right now, where if you sign up for their brokerage platform, which is very similar to Robinhood, where you can buy and sell stocks as well as cryptocurrencies, they're going to be giving you 6 free stocks if you invest $100 into any stock of your choosing. Now, I personally would invest my $100 into ticker symbol VOO, which is an ETF that tracks the S&P 500, and it's an overall very safe investment. Also, once you invest your $100, you're going to be receiving 6 free stocks, and you're automatically going to be entered in to win $12,000. So, if you want free money, free stocks, and a chance to win $12,000, remember to go and click that link in the description box down below, and I wish you the best of luck. But without further ado, let's jump right into the data for NIO stock. So right now, the NIO stock currently trades for around $17.90, which is actually a slight rally from what it was previously trading at. So it's good to see some momentum building for NIO stock. The low-end analyst price prediction for the company is $26 per share, and this is a 12-month price prediction among professionals. However, these professionals are more bearish and negative when it comes to this particular company, but I do like how the current stock price is trading below the low-end bearish price target by analysts, because this gives us a good margin of safety. The average analyst consensus for this company is $41 per share, so if the average price consensus is true, we could literally double our money here. And then lastly, for the next 12 months, the more bullish positive price targets go as high as $87 over the next 12 months. 28 of these analysts say to buy the company, and 1 says to hold, while none of these analysts actually say to sell this company. So overall, I would say that this company has Wall Street supporting it, including prominent institutions such as Morgan Stanley, because according to Morgan Stanley's research and technical analysis, they believe NIO's NIO stock is actually going to rise in the next 15 days, mainly due to not only their delivery numbers, but their approaching earnings report, which we will talk about in our next article. If you didn't know, NIO is an electric vehicle company, which makes the NIO stock an electric vehicle stock, which are the stocks that I really like talking about. The reason why the NIO stock has actually been downtrending and then recently regained some momentum is because of their suppression regarding their sales and their deliveries due to lockdowns in Shanghai. And this is set to negatively impact their sales because Shanghai makes up more than 15% of the company's sales according to their 2021 metrics. Now, with that being said, Morgan Stanley still has an overweight rating for the NIO stock and a massive price target that goes to $34 per share. So literally buying the company now at around $18 per share, you could literally make a lot of money over the next 12 months for this particular company as the market stops holding this company back. Because once these lockdowns actually stop, it's going to act as a slingshot effect, and the sales and deliveries of this company are actually going to surge very dramatically. Institutions and analysts from Morgan Stanley actually think that the NIO stock price is undervalued right now, considering that they have a $34 price target, but I would love to hear your thoughts down below. So now let's compare NIO to stock market benchmarks. So NIO's NIO stock has recently outpaced the S&P 500, which is represented in ticker symbols VOO or SPY, both both of these ETFs track the S&P 500, which to me is probably the most accurate stock market benchmark. NIO also outpaced the Dow Jones, which is another index, as well as the Nasdaq. So out of all of these indices, NIO has actually outperformed these, at least in the short term. Wall Street also has positive outlooks for NIO's approaching earnings report, which is expected to be released on June 9th of 2022. Right now, Zacks Ranks actually says, according to analysts, that they anticipate that NIO is going to bring in a loss of 63 cents per share and revenues of around $9.84 billion. And the reason why this is good news is because this would represent a 40% increase for their EPS and earnings per share, and it's also going to represent a 75.61% increase when we compare these stats and financial metrics to what they brought in last year in the same time period. So overall, I would say that analysts are actually very bullish on NIO. They are giving NIO very high price targets and metrics that they're anticipated to bring in on their upcoming earnings report, and we could see this reflect very positively in the NIO stock price, at least for the short term or leading up to their earnings report. Zacks Rank also has a very proprietary rating system, and they rate stocks on a scale from 1 to 5. 1 would be a strong buying opportunity, while 5 would be a strong selling opportunity. And according to current metrics, they believe that NIO's NIO stock is actually a 3, which means that it's a hold right now. And honestly, I would tend to agree with them that holding the company, not buying or selling, could be advantageous, especially because we are set to have major volatility due to the overall negative bearish macroeconomic environment and various stocks falling very dramatically right now, on top of the volatility that is clearly going to be implied from their earnings report. Because we could see a pre-anticipatory run-up in price, which we are seeing right now before their earnings report, and then once their earnings actually come out, we could see the stock start to trend downward again, just due to macroeconomic factors. But overall, I am very bullish for their approaching earnings report, and I think this is very exciting for NIO stock as a whole. I also really like NIO stock compared to other electric vehicle companies that are currently on the stock market right now. I would say the heavy hitters in this particular industry would clearly be Tesla, NIO, XPeng, Lucid, and Rivian. Now, out of those, I would honestly rather put my money toward Tesla and NIO, because I think Rivian and Lucid are going to continue to fall downwards, especially during this current stock market environment. Now, I'm not saying that those are not good and well-respected companies, but I am saying that right now may not be an ideal investing opportunity in those particular names. However, Tesla is always a pretty strong hold over the long term, and all of these electric vehicle companies are actually going to be long-term holds because this is a developing industry. So if you're not willing to hold these EV stocks for at least 5 to 10 years, you probably shouldn't invest into them unless you want to trade off of the volatility. But like I said in the beginning, I am not a stock trader. I buy and hold for the long term, and I don't allocate more than a 5% initial investment into any one company because that's just called practicing proper risk management. But even this strategy should only be done once you have a good foundation of blue chip stocks and solid ETFs that track indices, such as VOO or even VTI would be a really good investment on top of blue chip stocks. I'm talking about your Microsoft, Apple, Amazon, Walmart, Visa, and many others. So with that being said, let's go back to NIO stock, and today it's actually currently up around 3% if I'm not mistaken. Oh, right now it actually dropped down to around 1.76%. What I find really funny about this is despite fears of decelerating growth and lower delivery numbers or projected lower delivery numbers due to the lockdowns in China right now, investors are actually still pretty bullish on NIO stock, and we even saw that rally on June 1st of around 9%, which is absolutely amazing. So clearly, NIO still has some very bullish investors surrounding it, and I would say that the overall bullishness on NIO is very positive. I also want to say that NIO is not the only one being affected by the overall stock market environment or even this bearish tone regarding electric vehicles, because nearly every automaker in China had to suspend production according to the lockdowns that are currently taking place in China. So this would include companies like Li Auto and XPeng that are also suffering from these lockdowns. The good news is that NIO is delivering their ET7, and that started back on March 28th. And investors really didn't want to see any sales disruption because they wanted to see how the overall market is going to accept this new ET7 sedan, Sedan, which was supposed to really boost NIO's overall numbers and financial metrics. As far as their overall deliveries went, I would say they have done pretty well. For instance, NIO recently reported their delivery numbers in May of around 7,024 electric vehicles, which would represent a 38% increase from April and about a 5% year-over-year increase. So overall, clearly this company is still scaling very impressively, which is why I currently really like NIO stock. Also, I want to add that this delivery report actually revealed still pretty strong demand for their ET7 Sedan despite these overall lockdowns. So let's break down the numbers for their individual electric vehicles that NIO actually sold last month. So we have their ES6, where they sold 2,936 units, their EC6, where they sold 1,635 units, their ES8, where they have 746 units sold, and their newer ET7 actually outperformed the SUVs, which would be their EC6 and their ES8. So overall, I would say that is absolutely phenomenal news, especially for a newer type of car. And remember, their ET7 delivery started since March 28th, and they already sold around 2,563 ET7s. So this clearly implies that there is strong demand for this type of electric vehicle sedan. More good news is that NIO has plans to launch new products in the future, which is fantastic news, along with upgrading their smart cockpit hardware in their existing SUVs, which we just mentioned earlier. And how they're going to do this is that they are going to install Qualcomm Snapdragon 8155 chips, HD cameras, and 5G modules, among many other things, to make not only their vehicle technologically advanced, but it's also going to make the overall vehicle more appealing to consumers. Lastly, NIO is delivering on their promise by launching their international market over in Norway. So hopefully they're going to see a plethora of success come from that particular area. Now, it's not all rainbows and sunshine, because NIO's EV stock is still trading around 45% down year to date, and there could be further downside opportunity for this particular company. As the NIO stock drops lower and lower, investors are actually using this as a buying opportunity to get this phenomenal EV growth stock for as cheap as they possibly can, because they believe over in the long term this company is going to rally very aggressively. Now, the main risk for NIO stock is a potential delisting from the United States stock market exchanges, so I would thoroughly press you to research that, because there are risks for NIO stock. But if you don't think that they're going to get delisted, then this could be a prime buying opportunity for you, depending on what type of investor you are. So overall, we're going to conclude that NIO stock is a good long-term growth stock which has phenomenal future potential if you are willing to hold the company for at least the next 10 years. And that's exactly what the Motley Fool author says in this article. This is going to be a long-term growth play, so if you're not willing to hold the company for that long, then this may not be the stock for you. But I would encourage you to make sure and do your own research. These are just my opinions, my preferences. I hope this video was enjoyable and informative to you. Remember to go and smash that like button for more videos like this one. Comment your thoughts down below, subscribe if you are new, and I'll see you in the next YT video.